Good morning, good afternoon, good evening, traders across the globe. Welcome to Short-Term Trading Live with Oscar 638 video, baby. Yeah, 638 technical analysis videos that have been put together to help you traders become better at technical analysis. And I kid you not, if you become better at technical analysis, your trading has to improve. Analysis is the roadmap to where these markets are going next. In this video, we'll show you a couple of reasons why we have a red Omni on the board for the Nasdaq and the Dow Jones Transportation Average for trading on Monday. Traders, this video is being filmed on Sunday night for trading Monday. That would be September 4th, 2010. Before we get into the video, you must know this. Futures trading is quite risky and can cause substantial financial loss. And when I say substantial, I mean substantial financial loss. So if you do not recognize the risk involved, if you do not know how to play this game, if you do not have risk capital, keep your butts out of this arena. This is not for you. But for you cowboys who are out there that like to get in the markets and be out before the day is over, I got something to show you. Traders, for trading Sunday night into Monday, we are looking at the very same thing that was on my board the last video I did for you, and that was this. Flat tops produce market drops. Are we at a flat top? Number one, we know unequivocally that flat tops almost always produce market drops. So we know that number one is correct, and it is a yes. That's factual. We can prove that. Are we at a flat top is a little bit difficult to call here because the leader of this whole gamut, the Dow Jones Transportation Average, is absolutely at what you would call a flat top. It had a one-day spike up. It looked like stops were maybe ran in the S&P. We had a little spike up, but the flat top looks valid in the Dow Jones Transportation Average. The Nasdaq basically has indicators that are pointing towards the downside, and the formation seems to have cooled off. The S&P, however, in this mix, the S&P looks quite neutral. It does not look bullish. It does not look bearish. It looks neutral, the formation on the chart, but the indicators, they look slightly bearish, if not bearish. Then you have the Russell. The Russell 2000, it looks bullish. I'd buy the Russell if I only had a Russell chart. I'd look at that chart, I'd do my homework tonight, and I'd go long Russell. But the Russell is not the leader. The transportation average is the leader. The secondary leader is the Nasdaq, and both of them are pointing lower. So I am going to play the game of follow the leader Sunday through Monday. I'm going to follow the big boys down, if that's where they go, and I will be selling Nasdaq to try to capture that. Traders, usually for us, our analysis is cut and dry. It either points up, and most of the indices, if not all of them, agree, or it points down. Sunday night, tonight's analysis is not so cut and dry. I'm telling you, I'll say it again. Nasdaq's got a sell signal. Transportation average has a sell signal. The Russell has a buy signal. The S&P has a neutral signal. And then the Europeans, one's going up, one's going down between the Nasdaq, between the DAX and the FTSE. So we do not have a clear-cut Omni. What we have are the leaders pointing down. I love to play the game follow the leader. We do have the flat top, but is it qualified? Well, we'll find out today. I basically assure you that by the time Sunday through Monday is over, we will have had that flat top and have broken down from it. Or, of course, stops will get ran and we'll go higher. But I think the evidence I'm about to show you in the chart segment, and here we go. That's it. Let's it again, baby. Yeah. Traders, before we get to the chart segment, we have the comment question of the day. And you know what? I really like this part of the video because in this part of the video, I get to open up viewer mail, and it's somebody who's written an email to us or commented on our YouTube video, one of our thousands of Omniacs. They write in, they write a question to me, and I get to read it and open it. And this one, surprise, this one is from Trader Jose. Trader Jose from New Mexico. I didn't expect to get this from you, baby. He writes me letters, but I didn't know yours would be chosen. Very good. Trader Jose, Generally, I get the envelope. I don't know what's in it, and I definitely don't know what I'm going to get to open it with. That is my able-body assistant's job, and I usually back up because you never know what it's going to be. What am I opening the envelope with on this particular evening?
A dustpan.
Oh, that's going to be an easy one. A dustpan. The janitor must have been here a little while ago. All right, so we have the Trader Jose envelope from New Mexico. Trader Jose, I hope it's interesting. I'm sure it will be. And let's see if we can get in there. All right. Oh, I'm getting right into this bad boy. Maybe I should use the harder part, the back end. All right. So we'll get this bad boy opened in a moment, and then we will find out what you have in mind, Mr. Jose. All right. I don't know if this one was as exciting as some of the other things we've used, but you can have it back now. Sooner or later, he's going to drop that on my soundboard. All right. Trader Jose from New Mexico. First of all, Trader Jose, thank you for writing it. Thank you so much. You guys that write it, I greatly appreciate it because I read through all the emails, I read through the letters, and it gives me food for thought for the videos, and I love to answer your questions. That's what I'm here for. All right, so Trader Jose says, Oscar, if you notice flat tops or double tops in a number of the leader indices that we have built. Gotcha. Let me start that over. If you notice flat tops or double tops in a number of indices, leading indices, that we have built over the last few days, but you also see at the same time, so he's noticing that we have double tops. You see at the same time, swing day up formations in many of those same indices. Question, which formation takes precedence? Is it the swing day or is it the double top? Trader Jose, great question. First of all, I love it. Great question. Which one is most important? Which one would you go with? The double top or would you go with the swing day? Well, the question is easy to answer. It doesn't even need a chart segment. Here's what you got to remember. A swing day is a one-day formation. Sometimes it only works for half the day. It is a one-day formation looking for a quick trade to get in, to get out, and on with the market. When you see a double top, in many, many instances, that double top means change of direction and market starts to trend lower. So, very, very, very much you would go with the double top over a swing day on any instance where that comes your way. Now, what does that mean? What can happen is the double top can be there, the swing day can work that day, then the double top kicks in and down you go. But I assure you of this, double top is stronger by far than the swing day. So if you have to make a choice, double tops by far are your choice. Thank you so much for writing in. Okay, traders, if you have comments or questions, do not be bashful. You can leave a comment question at the bottom of our videos. This video right here that you're watching, just below, you can leave a comment question, and I'll be glad to answer that. Or, of course, you can shoot us an email, and I'm going to put you on the spot. What's the email address?
Oscar Futures. Actually, it's Futures Analysts.
Got him. Say it again, please.
Futures Analysts at gmail.com.
Futures Analysts at gmail.com. It's something I say in every video. I knew you didn't listen to that one. I got you, Claude. Caught you off guard on that. All right. You know what happens when you hit something so close to home? That's when things like that happen, you know, because it's like, oh, that's so easy, like when you ask someone their phone number. In fact, quick story before we go on with the video, the short segment. Down on the trading floor, good 15, 20 years ago, we get a guy that's on Jeopardy. Jeopardy? No. Who Wants to Be a Millionaire? Is it the one where you answer a few questions, you get to like $1 million? All right. This guy gets chosen. He's one of the smartest college-educated Harvard brokers in the pit. Because a lot of guys in the pit really aren't educated as far as Harvard or Yale. You know, they're a quick college right into the pits. This guy, very, very educated dude. So he gets on the show. We're like, this guy's going to win no matter what. And he gets on and he's banging away question after question. He's up to a couple $100,000. We're cheering him on. And they come in and they ask him a question about the commodities exchange. Of all things, they hit this guy right at home. He should knock this one out. He gets it wrong. Done. Loses the money. Just like that. And when he answered the question, you could see the words. He tried to pull him back because he knew the answer, but it hit so close to home, it knocked him off guard for a split second, and he fumbled the ball. Wow, what a mistake. And we were all like, boo, because we were watching it in the pit that day. Everyone had the TVs. It was great. Anyway, that's how things like that happen. When someone asks you something that's so easy and it hits you right at home, sometimes you get knocked for a loop. All right, so enough nonsense. Traders, back to the charts. Okay, so what I'm going to put on the board in just a moment should show you the slight confusion between the S&P versus the Nasdaq and the Dow Jones Transportation Average, but you will also recognize that the strength in that arrow, the down arrow, I think wins out this technical argument. With no further ado, let's go look at some charts. Okay, traders, you are looking at the leader of U.S. indices, the Dow Jones Transportation Average, and this is a daily bar chart. This is a pretty simple technique I'm going to show you right here. It is called a flat top. If I had more room on this chart, I can go back and show you flat tops as often as I can find the flat top, as often as you will find the market break right after it forms. So, we say one of our rules is flat tops produce market drops. Here is a flat top. Here was the end result. Right before this picture, right before the end of this chart, was another one. This one was almost one, but let's go with the one that's crystal clear. Flat tops produce market drops. Are we at a flat top? Well, I said this in the video just 2 days ago when these 2 days did not exist, and we basically said, oh, we had a flat top. We're going to have to step aside for a day and let the market tell us. Well, this was the day that we stepped aside. The market rallied up, hit some stops, turned around and dropped right back down, and then the next day, the day we traded, Friday, actually respected the flat top and broke down, and we were able to capitalize on that. So, is it a flat top? I think that this was a stop run right here. I think this is a flat top. The indicators would absolutely agree, but it has not broken down yet. So to outright call it a flat top would be a little overzealous, I think, as far as an analyst is concerned. That would be more of an opinion than a fact, whereas the flat top, when it does begin to break, then becomes a fact. I think what should happen is on Monday into Tuesday or Sunday into Monday, we should respect this flat top area once again and begin our descend, and then on Tuesday have much more of a break. That is, of course, if we do not take out this high and continue on the upside. Flat tops produce market drops. We expect that this is a flat top. We are going to trade it as it's a flat top. And if you look behind this chart right here, traders, you will see I have an indicator that I really like to use on the transportation average. And that indicator is the MACD, Moving Average Convergence Divergence. And it is a laggard indicator. It is a slow mover. But when this indicator starts to bend, it is telling you the market is basically ready to head in the other direction. If it was going up and it starts to bend down like this one does, the market has basically already begun to move lower because, again, it is a laggard indicator, not a leader. It follows the market, but in a trend formation. So if this starts to move lower, it means we're trending lower for a few days. So this caught my attention. The slow stochastics, as you can see clearly, have reached this overbought level, and we have it outlined with the red line. Overbought, now we have the double hook, and it's on its way down. So indicators would lead you to believe that the transportation average is clearly going lower. Let's look at a couple of more charts here. Okay, traders, we are going to trade the Nasdaq on Monday, and probably not the S&P, at least at the onset of this trading session, because the Nasdaq has basically a crystal clear sell formation in its indicators, and it's got this little bit of a rounded top right here. And if I really wanted to stretch it, I could show you it's got a little bit of an apex. There's a lot going on up here that makes me think the market should go lower, but the indicator, if you ask me, is starting to paint the picture for us. That is your slow stochastic. Now, it's not slow, even though it's called the slow stochastic, only because there's a fast and a slow stochastic. This is the slow. But it does not mean it's a laggard indicator. The slow stochastic is actually a leading indicator and jumps out ahead of the market in most instances. This is showing us that the market wants to go lower, and let me show you the MACD on the Nasdaq because that's interesting as well. Okay, traders, the Nasdaq, MACD, again, a laggard indicator, one that shows you trend is developing or continuing. MACD has clearly reached an overbought area and was pointing straight up until Thursday last week. As of Thursday and Friday, the MACD has bent over, and now you can see that the other average, the secondary part of the MACD, is now getting ready to cross. That is starting to look weak. So our two leaders, transportation average and Nasdaq, both look weak, both have sell signals, both have selling or bearish indicators. So I think that we have to follow these leaders down. Now let's look at another chart. Okay, traders, the Emini S&P. Here's a chart that if you looked at that and thought the first thing that you would think is sell, I'd say get yourself another pair of bifocals, because when you look at this chart, it's not the first thing that comes to mind. You see that we're in a pretty nice looking channel right here. It's been respecting the channel all along. It just bounced off the bottom on Thursday and again on Friday. And the odds are good when you're looking at a market like this without comparing it to other markets in the same industry and without looking at indicators. Your first glance, you would absolutely think that this is bullish looking. I know I would. But if you investigate deeper, you will see that indicators would not be on your side. And its sister indices certainly do not look bullish. But traders, I kid you not, this is a neutral signal, because that is not a bearish looking formation by any way, shape, or form. Inside of a channel like that, with no other indication that it should go lower, you would be a buyer, not a seller. So what does that do for us? That means the transportation average has a sell signal and looks clear. The Nasdaq has a sell signal that looks clear. But the Emini S&P does not have a clear sell signal. I'm going to go with the Nasdaq on Monday and leave the Emini S&P on the shelf for a couple of hours at least, if not the whole trading session. All right, traders, another chart I'd like to show you here is a very interesting one. Let's look at that. Okay, traders, we are looking at the Euro currency December daily bar chart. Euro currency, a well-defined parallel channel, undoubtedly. This market looks strong. This market looks like it wants to move higher. The indicators are pinned. All of them basically are up at the top and just going like this. And many, many times in a bull market, indicators will get pinned and stay pinned for weeks, if not months on end, while the market continues to rally. So the indicators are basically moot at this point, and you got to go based on chart formation and what's happened in the past price action. Chart formation here would lead you to believe that if you get anywhere near this line, you become a buyer. And if you get anywhere up here, you'll be taking profits or getting out of a trade. But you try not to be a seller up here. You buy the dips when you're in a well-defined bullish channel. We don't sell the rallies, we buy the dips. So that is the way we're going to continue to handle the euro currency until that stops. The other side of this equation is if you look at a dollar index chart, you certainly wouldn't want to buy that. That is as bearish as can be, the dollar index chart, opposite of this, which is looking pretty bullish right now. Now, of course, traders, the Bank of Japan is getting ready to intervene on the Japanese yen, so this could change in a heartbeat. But if the market stays normal, you can keep buying the dips in the euro until things turn. So that's my take on the markets. Pull your own charts, do your own homework. Make sure you look at your indicators. Certainly compare the S&P to the leaders of the U.S. indices before you make a trading decision for Monday. So, traders, you've seen the charts. That's my technical argument for Sunday night into Monday. So the question was, are we at a flat top? Again, we know that flat tops do produce market drops. But are we at a flat top? My technical opinion is yes, I think we are. The indicators agree. But not every indice is pointing down, so it's not an easy call yet. I will say this, if we start to break, then this flat top becomes reality, and then Tuesday and Wednesday get much easier because direction is set. So get psyched, because Monday very likely should give us the direction for the next couple of days going forward, making trades a little easier to catch. There's never been an easy day trading, not once in my whole career, so I'm not trying to say it's going to be easy, just slightly less hard on Tuesday and Wednesday if we start to break on Monday. All right, traders, so I'm going to get out of here. The week is young. It's only Sunday night. We have a long way to go. Remember to always place your stops, because we know this, a stop is your best friend. at all times. Have stops in. Put the stops in before you even get into the position. So God forbid something goes insane. The president gets sucked off the planet by Martians. Whatever happens in between the moment you type your order to get in and the time you put your stop in, if you put the stop in first, these crazy things can't happen to affect your position. Put your stops in first. It will help you one day. I assure you, you'll remember this. All right, traders, look at my board. I'm thinking I'm done. I'm out of here. Give me a call anytime, Darren, at 702-629-4755. Make sure you come on down to the site, traders. It's www.livewithoscar.com. When you get to the site, join our chat rooms. Don't trade alone. Come in the trading chat rooms. They keep telling me to say trading rooms. I keep saying chat rooms. All right, we'll try this again. Traders, when you come to the site, come to our trading rooms. Don't trade alone. Come to our trading rooms where I am there to help you traders understand the analysis better, understand these markets better, and I share my 28 years experience with you openly. So come on down. Also, one thing I know you wanted me to mention, when you are at my site, we have these forums where you guys can place questions out on sort of like a bulletin board where other Omniacs can read those questions and post their answers. It's pretty interactive, and you can post charts there. So when you're at our site, use our forums as well as the trading rooms and everything else we have to offer you. Traders, do not be afraid. Forums are free. The trading room is free. A lot of free information there for you. So come on down and learn how to be a better analyst. All right, time to go. Anything?
All set here.
Good? Good. All right, I'm set too. Traders, keep your emotions out of trading. One of the best things you can do to help yourselves to keep your emotions out of trading, and I know it's not easy, is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.
Okay.
Where is it?